Thank you for watching the CEO Barbecue. My name is Antonio, and today I'll be looking for gold and copper in Papua New Guinea, together with Michael Murphy and Cathy Fitzgerald, respectively the CEO and the Chief Geo of South Pacific Metals. Before we get into the actual interview, though, I would like to warn you that we have received no monetary compensation for the production of this video from the company that's being interviewed. However, I do personally own shares of this company, so I am to be considered biased. Please understand that this channel is a business that sells content producing services to companies, which means you cannot rely on this video for research, and you should treat this as an advertisement. Instead, research is conducted on setterplus.ca and nowhere else. Please only watch this if you know what you're doing. This interview is intended only for experienced junior mining speculators because mineral exploration, development, and mining is a very tough business where failure is the norm and should be the expectation. This is going to be a conversation that is genuine and personal in nature, containing forward-looking statements. I am not a licensed financial advisor, so before continuing on, please talk to an investment advisor with a good long-term track record because your capital is at risk, and I am neither a licensed financial advisor nor do I have a good long-term track record. If you're not 100% sure you understand 100% of the disclaimers that were just showed on your screen, please go to the last section of this video and do not consume this content unless you fully understand and agree with everything said herein. That all said, South Pacific is listed as SPMC on the TSX Ventures Exchange, where over the last 3 months, an average of about 40,000 shares have traded daily. The stock's 52-week high is 78 cents, and its 52-week low is 31 cents. With a market cap of 23.5 million Canadian dollars and 52 million shares outstanding, today this is a 45-cent stock with a 50 and a 200-day moving averages at respectively 49 and 52 cents. As of the beginning of February this year, there were 15.5 million warrants with an average exercise price of $1.26, as well as 3.2 million options at 45 cents were outstanding, bringing the number of fully diluted shares to 70.5 million, meaning an increase of about 36% in shares outstanding can be expected if all dilutive securities get exercised, which would then also result in about a 26.5% ownership dilution if, and that's of course always a big if, but if those actually get exercised. As you might have noticed by the average 3-month volume that I just told you about, this is not a very liquid stock, and that is because about 70% of the shares are in the hands of insiders and strategics, but hopefully we'll know more about exactly what that means in a couple of minutes. Moving on to the financial statement, the latest of which shows us the numbers as of December 31st, and it covers the full 2024. The assets side of the balance sheet at the time held $250,000 in current assets, most of which, so $152,000 to be specific, was in the form of cash and cash equivalents, with some account receivables and prepaid expenses on top of that. The liabilities side had in total about $3.1 million on it, mostly in current liabilities and mostly in the form of account payables to the tune of $1.6 million, whereas the long-term liabilities were represented by $700,000 worth of convertible debt and the $300,000 derivative portion of that convertible debt. It is worth emphasizing, though, that this financial statement is from the end of last year. That's particularly important in this case because the company did raise 6.3 million Canadian dollars at the beginning of February this year. So their treasury is likely still sitting at around or just under $6 million as we speak. Moving on to the P&L for the 12 months that ended on December 31st, SPMC recorded $1.7 million in administrative expenses, which included a non-cash cost of $546,000, which was in the form of share-based compensation, leaving them at about $1.1 million cost for the full 12 months last year, which is an average of $96,000 on a monthly basis. 65% of the administrative cost can be attributed to board, management, corporate, and administrative, whereas marketing accounted for 22% of the spend, and the rest was essentially accountants and lawyers. Exploration expenses here get capitalized, so you have to go to note 6 in the financials to get the overview, which shows us that they spent a total of $1.1 million on exploration and evaluation, specifically focused on the Kainantu side of the story, or the Kainantu project, which is actually 2 projects. And it's also likely going to be the focus of our conversation today. There's no breakdown of these expenses, but I do know that there was no drilling happening at Kinantu last year as the company was going through, well, first at the beginning of the year, they were going through restructuring, which will hopefully be part of the conversation as well. But there was some surface work being done there. In terms of ratios, though, that means that I don't have the drilling to marketing ratio for you that I typically have here, but I do have the exploration to administration ratio, which sat at about 1-to-1. So a close 50-50 split, essentially, meaning just about as much money was spent on exploration as was spent on administration, although that is expected to be different this year. As always, though, I encourage you to go through their financials yourself, as I'm not infallible, so I might be making mistakes in my reading or interpretation of these numbers, and their financials can and should be found on setterplus.ca. That all said, this sounds like enough accounting for one day, at least for me. So I'm moving on to their projects, of which the company has 4, although they can kind of be grouped into 3. And all of them are 100% owned, and all of them are in Papua New Guinea, 2 of which on the western side of the country and 2 on the eastern side of the country. On the western side, it's the Osena and Anga projects that piqued my personal interest because of their proximity to K92, with both of them sharing a border with K92, as well as there's some geological similarities to be talked about. There's also no royalty on these projects. And then there's the Kili Teke project, which has an inferred resource on it already, showing 1.8 million ounces of gold and 800,000 tons of copper at respectively 0.24 grams per ton and 0.34%. And that's in one porphyry deposit. There is a royalty on this one. There's a 2% royalty on it. And then there's the May River, where historical drilling has returned 109 meters of 1.5 grams of gold per ton, as well as some copper with no royalty on it. There's much more to be said here, really, but I feel like I've listened to my own voice for long enough today, so I'll work towards shutting up now. And Michael and Cathy, give you the word. But first of all, thank you for being here, of course.
Thank you very much for having us. Great to meet you the other day.
Yeah, thank you.
Pleasure's all mine, of course. And it was great to meet you the other day, Michael. But since this is your first time on the CEO Barbecue, we'll have to go through a couple of the obligatory smell test questions first, if you will. We're going to start off with the CEO himself. Michael, who are you and why do you think you're the right man for the job?
Who am I? Michael Murphy. I started a gold company 14 odd years ago. We took it from a $4 million effective shell. I sat on the board for 13 years. When I left, it was worth $2 billion. It's worth a little bit over $3 billion now. We overcame challenging geological and social issues. So I guess I've been, this isn't my first rodeo. We've done it before. Obviously, I don't do this in a vacuum. I've got Cathy and a whole bunch of other great folks that help out. We've built a team pretty much from scratch over the last 12 or so months. And yeah, I think we put a great team together and we're now executing.
Cathy, what about yourself? You're the chief geologist here. What did you do before this? Have you worked in similar geologies in similar parts of the world before?
So I'm the president and chief geologist, so I also am responsible for all the operations in country. I have 21 years experience now in exploration, resource development. I've worked on projects around the world, Peru, Colombia, a lot in North America. I was with Ivanhoe Electric for a time, used to be called High Power Exploration, doing a lot of porphyry copper exploration. And then I was the vice president exploration for Apollo Silver. So I have a lot of experience in this type of geology. And yeah, so now we have a team about 25 people for sampling programs all around K92. By trade, I'm a geochemist. So a lot of interesting different ways to think about exploration, I think, using underutilized data. So
did you say 21 years?
Yes.
I didn't know you could finish college at the age of 10, but that's interesting to know. What's the
Thank you.
You said you have a team in country here. What is the do you have any of the executives or the board members residing in country currently?
Well, one of our co-founders and board members was in country for 11 years and has operated a EPMC and still does. business in country. So we have a lot of executive experience in country as well.
And I'd add also to that Dean Williamson, who runs our exploration group in country, used to be the head of exploration for K92. He's lived in country, I think, for 7 or 8 years, and he's there 95% of his time. Mm. And he's a senior guy.
Mm-hmm.
I do want to talk about your largest shareholder and who, Michael, you told me he builds power plants for the government, which kind of stopped me in my tracks. What does that mean, or what is his involvement with the company? Because I mean, that doesn't sound like a mining guy. So what does he want with you essentially?
No. So just to take a step back, as Cathy said, he's kind of been there for about 11 years. 6 or 7 years ago, when K92 started to look like it was starting to have some success, he's the consummate entrepreneur, and he went out and he applied for and was granted these exploration licenses, which surround K92, which we now call Anga and Osena, which we'll get into in a bit. So he's on the board. He's pretty hands-off unless we need him. So, if there's renewal processes for exploration license and stuff that goes on a fairly regular cycle. Sometimes that paperwork processing could be done faster in Cathy's and my eyes. So all it takes is a phone call to him, and he makes a couple of phone calls, and lo and behold, things tend to get signed. So he kind of works as our government liaison officer, for lack of a better term. But he's friends with the Prime Minister. I played golf with the Prime Minister in December and in Sydney. We've got a direct line to the governors of the states that we operate in.
How much of the company does he own now?
Him and his two partners are about 18%.
Okay. What about yourself? You say the presentation says that 70% of the company is in strategic or insider hands. What percentage of that is you personally?
So I own about 2%, and I've got options and whatnot and warrants to kind of buy another 2%.
Right. Because I know you joined the company at a later stage. You didn't start it. You did restructure it. You helped restructure it. So the shares you own now, I assume they're not founder shares, but so you bought them in the open market.
Nobody has any cheap, funky stock. Like, this isn't sort of your typical junior mining deal where the people that started it sort of issued themselves 10 million shares at a tenth of a penny. Cathy and I own, we went through the restructuring, which I can go through. Last year we did a number of financings, but the cheapest stock I own is at 20 cents, and the most expensive stock I own is at 48 cents. So I participated in the 4 financings just like everybody else. Cathy and I got some options for being executives in the company, but that's the only stuff we haven't paid for.
This leads me to the thing that I was wondering actually after I met you in Switzerland, which was why. I mean, why did you join SPMC in the first place? It didn't seem like you need to work after the previous company you were involved with. So why do this?
Well, honestly, it's fun. And we took something that we saw that was broken, that we as a group, Cathy and I and others, saw a huge value in, and thought, wow, we're going to be able to really make something here. And I got a kick out of doing that. We got as I said, we put together a super team. It's not, it's not just me, it's not just Cathy. There's a group of us that, work on it. And it's a good, fun group, and we really believe in what these assets are.
Mm-hmm. Well, why I'm asking you that, besides in an effort to try and be funnier than I really am, is because I'm wondering what your incentive is. Like, what's really driving you? Are you looking for geological success? Or are you looking to make money off your stock? What is it that you're looking to do here?
I'm not a geologist or an engineer. I'm not in love with the rocks. I'm not in love with the engineering. I see an interesting, challenging way to make a bunch of money. Like, my goal is to communicate to the outside world the value that we see. So we did all this work, and we continue to do this work such that when you look at the company, you'll start to see the value that we saw at the beginning. That's going to translate into a much, much higher share price.
Mm-hmm.
So I'm in it for the stock.
Right. Does that mean you expect to be buying more shares in the open market and in future financings?
I'll participate in future financings for sure. Um, I haven't made a conscious decision whether I'll buy shares in the open market, and I probably shouldn't really comment about that publicly.
Hmm. Well, it's interesting here because of the specifically why I'm going in that direction, because I'm wondering about liquidity. If 70% of the stock is kind of in fixed hands, how do you fix that? How do you fix that? Does it need fixing in the first place? And how do you improve liquidity?
So if I have one thing that I find challenging and frustrating about this company, you've just hit the nail on the head. Everything else about it, I'm super happy with. How do we fix that? I think, shoe leather, going out and talking to as many people as you possibly can, demonstrating that, highlighting the value that we see in the company, that brings in the marginal buyer. And as the share price goes higher, there will be some people, I guess, that will inevitably let stock go. But it's really simple. Like, I've done, a couple hundred investor meetings in the last 2 weeks.
Hmm.
That's that's how.
Hmm. One more thing, because and I do want to go further with what you just said. Just one more thing that's part of my smell test question, which based on one of your previous answers, I don't expect this to be a positive answer. But royalties, there's no royalties, which I like. But you said there's no your typical Vancouver shenanigans. One of those things that I look for is, does management own a royalty on any of the projects? Kili Teke has got 2% royalty on it. Do any of you guys own
Actually,
that?
1.5%. It's a 1.5%. No, the
Okay.
1.5%. The royalty is to Harmony Gold, who we bought the project from.
Okay. Good. That's the answer. That's the answer that I was looking for. Well, a good point to go back to what you were previously saying. You've got meetings, you're talking to investors. Do you, with only 30% of the company essentially being available to market, do you feel like there's enough space for a JV or a big strategic partner at this stage?
100%,
Okay.
for sure.
The way you answer that question makes me think you've thought about this before.
Yeah, I have. I've thought about it a lot.
Well, what is it that you, and we're talking hypotheticals here and it's forward looking. I understand that. And maybe you cannot tell me too much, but what is it that you would be looking for? Because the first time I looked at this, I saw 4 projects, and typically in a junior, I consider that to be too many. So why not go more aggressive on the JV front and find someone with deeper pockets to move some of the ones along?
So, moving along more aggressive is kind of a relative term. So on May River, the big project up north, that is unquestionably a big company project. Like somebody should go up there and spend 40 or $50 million drilling it. Excuse me. So there are a handful of companies that have that kind of budget and that sort of interest. And it would be irresponsible of me not to make sure they were aware of that asset's existence. The same thing with Kili Teke. The Kili Teke asset, it's a different audience than the May River one. It's a different company audience. And again, I make sure that's my job, is to make sure that outside people, whether it's retail, institutional, or corporates, are able to see the value in these assets that we see. But I 100% agree with you. Finding somebody to foot the bills for the expiration on those other 2 projects makes a ton of sense. And we think about that and act on that just about daily.
Okay.
So you're not wrong. You're not wrong.
What is it that you would deem a good deal? So first of all, let's maybe establish that. Are we talking asset level or equity level or both?
So my view is nothing's on the table. I mean, I'll be commercial if it makes sense for shareholders. I'll entertain it. In an ideal world, you would do a company, an outside party would give you a substantial sum so you could actually, direct that money specifically for that project of which you agreed. And then if you were also able to get them to make an equity investment at the parent level, that would help with exploration work that we want to do, which would be focused on Osena and Anga.
Mm-hmm.
So I
It
mean,
is.
that at this stage, just so to be totally clear, we're at the stage now where Cathy and her gang did a whole bunch of work to try and understand what we actually own. Like there's 20 or 30 or 40 years of exploration work on all these projects, and nobody had put it together in one nice, package. So Cathy and her folks have done that. So it's only been in the last, I don't know, 4 months or 5 months that we've actually had this work so that we can go to a serious company and say, look, we've got these serious projects. And then they go, okay, well, great. Well, show me the material. I don't want to have to say this. Okay, that's really great. I'm glad you're here. So I'll get back to you in a month. My response now is, okay, great. I'll email you the link to the data room with everything in it. So that took some time to set up, but that work's pretty much done now.
So if I were to speculate that there might be a JV on one of the projects in 2025, that wouldn't be outrageous.
It's not guaranteed, but it's not outrageous.
Mm. This might actually be a good point to tell me more about the history of the company and the projects you went through: name change, restructuring, gathering of the land, and all that. How did it all come to be, and why do you have these permits, specifically Anga and Osena, if K92 was in the region first and could have picked it up before you?
So why don't I talk about the corporate structure a little bit, and then I'll get Cathy to talk
Sure.
to a little bit about the project history. So go back about 6 or 7 years or so. K92, after having a bit of a false start, let's call it, was now starting to sorry, excuse me, get some traction. They were starting to have some exploration success, but still a pretty small company. So our big shareholder who effectively lived in PNG got wind of it. There's not a lot of secrets in PNG kept. So he, I mean, it's really quite something actually, but that's for another day. So he went and applied for these exploration licenses. K92 didn't do it because they were sort of head down, and they were kind of just getting started. So Jeff owns these licenses privately. A Haywood broker comes along, convinces him to do an RTO and lists the stock on the venture, and they called it K92 Resources. I can't remember the exact amount of money they raised. Correct me, Cathy, if I'm wrong here, but they raised kind of like $5 million. They spent it and organized the company like they were a major mining company as opposed to a junior. They did two really good things. They bought this project from Harmony for $1 million after Harmony had spent $20 million on it. And the same thing with May River. They managed to acquire May River on really excellent terms. They were then unable to raise any further money, yet they continued to spend money at a healthy pace. And eventually that doesn't work. So cutting to the chase, the office Cathy and I work in, we've taken a bunch of different broken companies over the years, fixed them up, restructured them when we believe in the asset. So that was the case. So I got involved about January or February of last year. I spent the first 4 or 5 months fixing the balance sheet. I mean, there was, $2.5 million of payables. There was a $500,000 payable, next week to Harmony, and the company basically didn't have any money. So I negotiated with all the creditors, and we kind of paid 40 or 50 cents on the dollar. We got Harmony paid, restructured the company, rolled it back 10 for 1, did two 20-cent financings at the beginning part of last year to basically pay off creditors and, pay the audit fees and some pretty basic stuff like that. And then about May of last year, we started thinking, right, okay, now the accounting or the finance restructuring is kind of done. Now let's figure out what we actually own here. And then that's when Cathy got involved. And Cathy and her team then went and looked at each of the 4 assets, assimilated all this data. The amount of data we have is vast. And then they, sort of analyzed, what we have, what would be the next, what are the next 1, 2, 3, and 4 steps of exploration to advance the projects, What's the budget for that? Who's the people to do it? And so we've done all that work, and that took, well, I'll get Cathy to talk to it more detail, but that probably took close to 6 months, I'm thinking. And that was all sort of wrapped up at the end of last year. So that's a brief history. So it's basically broken. We fixed it because we believed in the assets. And the goal now is to show to outsiders the value in these assets that we see.
Cathy, get into your head right now that if you had to pick one project and drop all the rest, which one do you pick?
Tough question. I mean, if you asked Michael why he got into this, for me, it was, it's a geologist's wonderland. It really is. The things we were looking for under some of my previous entities are, sitting at surface here. The chemical signatures of mineralization are broad, intense, and everywhere. So that's a tough question because the geology is good at all four projects. The infrastructure and access is different. I mean, I guess I'd pick the Kainantu projects. That's where we're focusing.
Out of those two,
they're all interesting. So
it's kind of making you pick between your favorite kid, I suppose. But out of the two, Osena
a little
or
bit,
Anga?
yeah. I mean, they're different. They're all copper and gold, but there could be there's just different geologic systems, structures, different potential with each, which makes them all interesting.
Let's talk about more specifically about Osena, and we'll dive into some of the details as well as your exploration plans from both targets. But what's your exploration target size here? I mean, if all of your geological dreams do come true, how big of a resource could Osena be?
Well, I can't answer that question just yet. That'd be a very forward-looking statement. But geologically,
the project's about 600 square kilometers. We're focusing on an area that's 3 by 5 kilometers, where there's 5 porphyries and a load system over it. So it's a big system and part of an even bigger project for that package.
Yeah, so the district itself is like including K92's property. The whole district is 60 by 40 kilometers of mineralization, gold, copper porphyries. The reason why the porphyries are important, and we see this at K92 as well, is you have clusters of intrusions and then high-grade gold and veins kind of radiating outwards from those. So that's kind of what we're focusing on at Osena, is a cluster of porphyries along the same mineralized trend at K92, where a lot of the historic work has focused on those intrusions, and we want to focus on identifying peripheral high-grade gold. So the systems go hand in hand. They're complete systems. You could say, if you look at the model of a typical porphyry to epithermal system, like we see an intact system. So we want to find the gold part of the system.
That last part is interesting to me because there is indeed mention of intrusion clustering within that 15 square kilometer range here. You mentioned 5 copper, gold, and moly intrusive centers. What's the relationship between those 5 kind of internally? Are they completely separate? Do you think this is a multi-phase intrusion? What is it?
Well, so a lot of the historic work focused on one of these, and so we're continuing to work on that one. We call it Ontenu Central, but then there's 4 others around it. So porphyry systems typically occur in clusters. Each one can be multi-phase in itself. So it's a complex over, I think 6 by 3 kilometers now we see of these intrusions, and they can all be multi-phase in themselves, but then with each other. And that's what you want to see. And what we see in a lot of the major deposits in Papua New Guinea are these long-lived multi-phase events where you get overprinting of mineralization. So you would get, say, an early copper with limited gold with a later event causing more gold. So basically a lot of what I think and read and see at K92 is what we're seeing here. We're just at the stage where we're finishing up our on-the-ground chemistry sampling mapping so that we can go drill and test these theories. So.
And then that's something we'll talk about as well, chemistry sampling mapping. I'm just writing it down because we'll get back to it in a second here. Historic drilling shows only moderate grades there. There's like 100 meters, 0.32 grams per ton. That's gold. But what gives you the confidence that you can do better than that, given that, and K92 has been coming up with different grades as well. So where's the discrepancy coming from, and why do you think it could get better?
Well, so typically in these systems, the highest grade gold doesn't necessarily occur where you have your highest grade copper. Also important is identifying the structural features that host the high grade gold. And these should be, I mean, in this district, we're seeing those highest grade gold structures are spatially distal to those intrusions. Mm-hmm. So there were 4 historic holes here, 3 of them in 1985. And like you said, modest grade, but they drilled right over the porphyry and shallow. Whereas our trench we completed in 2023 was to the northwest, distal from that intrusion, and that's where we got the much higher grades. So 4 meters at 4.5 grams per ton, samples up to 8 grams per ton. Additionally, there was some historic sampling by Barrick, which we will revisit shortly, where they got 73 grams per ton gold in a rock sample. So we're going to try and validate that on the ground. And the key point being these were away from the heat source, hosted in structural features. So we want to make sure we understand what's around that porphyry, which hasn't been drill tested or, yeah, that's the idea.
I do want to talk about the structure as well, but what was the grade variability in these trenches that you talked about? Is mineralization here kind of disseminated or nuggety or fracture controlled or something else?
Well, it's fracture and lithological controlled, which is similar to what we see in what's being mined at, say, K92. So this trench was completed before Michael and I joined. We had sent the samples off after we joined because they hadn't been analyzed. So that was a 79-meter trench, for example, in diorite breccia, with the highest grades concentrated along fractures at lithological contacts. Mm-hmm. So we're going to follow that up, ideally more trenching and drilling to understand the extent of those gold mineralized structures.
Mm-hmm. And that's lithologically comparable to what K92 is drilling. So it's diorite breccias that they're finding that their mineralization as well.
Well, so there's 2 types. So Cora and Judd are hosted in metasediments. So those can be more challenging to find because they're not as porous, so they don't have a lot of alteration around them. But then their Arekampa and Maniapi are in that same kind of dioritic rock. Mm-hmm. So we keep an eye out for both systems.
Does that make it
so my plan in exploration, like when I first came into this, was to understand the deposits in PNG, to understand the deposits close to us, like what are their chemical signatures, their geophysical signatures, or structures. Like we don't want to start from scratch, and we're not reinventing the wheel here. Like, so what can we learn from around us to prospect better, without being closed-minded, of course, too. So yeah, similar geology, and that's kind of why they're exciting. We see similar geochemistry to what K92 is mining, similar host geology, similar structures. We just have to, put the drill holes in the right place.
That's what we all want. Does that make your prospecting more challenging, though, having the 2 different types? Do you have to go through kind of a different process to come up with targets for the one and then targets for the other?
No, I would say no. I mean, what's been very valuable is we have some experience with the terrain, but honestly, soil sampling is really valuable. We have exposed rock, but that's where the chemistry comes in. I mean, you can see different chemical signatures depending on what your host rock is, how much leaching there is, how much metal there is, what types. you want your geologists to be eagle-eyed when they're in the meta sediments, simply because the alteration can be much more spatially restricted than, say, in the diorites. But I would say no.
You do talk about argillic alteration or an argillic alteration cap here, though. How continuous is that, and how advanced is it across that 15 square kilometer package?
So we only one of these, say, this cluster of five, was what we call Ontenu, has been geologically mapped. So that argillic cap is, I think it's maybe one by, say, 1 by 1 kilometers. So we have the typical silica ledges, the things you want to see in a typical porphyry lithocap. And then I keep using K92 as an analog, but that's kind of what we're looking for, is you would see those highest grade golden veins away from that lithocap. So that's kind of where we're focusing our efforts, is outside this intrusive. And then to characterize the other four, because there's been limited to no work on the ground on those. And one of them, for example, Ontenu Northeast, Renison Goldfields was prospecting in the 80s in this region, and they were looking for low-grade open pitable bulk style gold, and identified quite a lot of visible gold draining one of these intrusives, their topographic highs too, in streams, and commented in their historical reporting that the area was interesting for lode style gold. So changing operator motivations, it may not have been interesting to them in 1985, but it certainly is to us now. So there's historical reports of potential for lode style gold. So that's where our focus is.
The argillic cap that you were talking about, that's it on end on. I'm not even gonna try.
Ontenu.
But it's
Yeah, it's okay.
Ontenu. That's in Ontenu Central, right?
Yeah, so we have five. That's where we have five porphyry targets, and we've just named them spatially. So
Right.
northeast, northwest.
Sure. So why don't you just go and sink a kilometer hole in there? I mean, what else is left to be done there in terms of targeting?
Uh, well, stay tuned for some news.
Well, I was wondering how you're going to.
I can see you eyeing me up.
That's what I'm looking for essentially. But okay, so what exactly is happening there now? What else do you have planned for 2025? Essentially, what I'm really going after is, are we going to see it drilled in 2025?
100%.
That's fair to say, yes.
Okay.
100%.
I mean, that was the ultimate goal when we joined this, was to, there've been high quality work on the K92 projects, but I think the vision of the big picture might have been missing, and then how to go about identifying what would be the most interesting style of mineralization and then drill it. So
how much is
that's
that
the
going to
plan.
cost? What are the costs in that part of the country for drilling per meter?
Do you want me to do it, Michael?
Well, I'm going to answer that. You
answer that.
Right. So the actual drilling costs are fairly modest. 150 to 200 meters or two, but the cost is the logistics. How much helicopter time, or how remote is the place? Now, the nice thing about Ontenu is where we'll, the plan is to drill first. You can kind of drive right up to it. So, I mean, will we need a little bit of helicopter support? Potentially. K92 has a full-time helicopter on site, which they've offered to us. We've also bought a man-portable rig. Now, as Cathy alluded to earlier, all this stuff is pretty shallow. So Dean ran an exploration program at K92 where they had kind of 10 rigs going. So we bought our own rig. It'll arrive the end of May. You can break it down into small pieces, and a dozen guys can carry it around. I mean, it's called man portable because it really is man portable, and that'll let us drill up to 500 meters. We talk about putting one deep hole to trying to catch that porphyry. But the rest of the holes, I think, will be fairly shallow as we try and grab some of these low gold veins on top of the porphyry. So we're doing a little more field work now in preparation for the arrival of the drill at the end of May, and then I don't know, it takes maybe a month to get set up and get in the field kind of thing.
Well, how is it topographically though? You said you could drive up to it technically. How's that part of the country topographically?
So Ontenu is kind of rolling hills, and there are some areas where it's a little steeper, but it's not mountain. There are areas in PNG where it's quite mountainous, and the mountains are pretty steep. This is not that.
Yeah. Because and I'm
This is
looking at
not
it
that.
right now. Actually, I'm looking at a topographical map of that part of the island. But the mountains kind of go through the extension of the island and go west east or east west, whatever you want to say. Where you're not in those mountains, or like where are you? You're north of that mountain.
Cathy, you want to elaborate a bit on that?
Um, yeah, I mean, the both Anga and Osena are very large land packages. Anga in general is kind of the foothills of the steeper mountains to the south. And then Osena, similarly, it's kind of rolling hills with more of the mountains to the northwest. So variable terrain. I mean, where we're working right now in both areas are kind of these grassy rolling hills with incised stream valleys.
Why I'm asking that is one, drilling costs, but also second, thinking way out in the future. If you find something, what does that have to look like in order for it to be a mine? I mean, if it's flat terrain, easy to get to, you can make it work, an open pit at half a gram or something like that. In your case, do you have any examples of or comps from around the world where you say, like, we have to have at least that type of porphyry in order for it to become a mine, given the topography?
Well, we would do that analysis for Kili Teke. I mean, for Kainantu, there's a mine next door, and roads and power and water and labor. So I mean, we have the metrics right next door with K92. So it's not a stretch that anything discovered that could be economic on Anga or Sina could be a mine or feed an existing mine.
Hmm. That last part is interesting as well. What is the what are they operating at? What's the grade profile there?
At K92,
Yeah.
last quarter they produced at 18 grams a ton.
At what? It kind of broke up there.
18 grams a ton last quarter.
Okay. Okay. So it is, yeah. So it's just very high grade. That makes sense. What's the permitting landscape in Papua New Guinea, and specifically that part of the island that you're on?
If you follow John Lewin's playbook at K92, it's pretty straightforward. The goal is, or the plan has to be, in my opinion, is you start small or modestly and then build up, which is exactly what K92 has done. I'm going to get these numbers slightly wrong, but they started off doing 100,000 ounces, then it kind of went to 150, and then it went to 200. And you know, if you start and you do it incrementally, the process is very straightforward and timely. If you come in and you want to build a super project like $10 billion of capital or something to build some great big super mine, it's more challenging for sure. But if you sort of start off modestly and grow, I mean, K92 started off modestly, and I think in 3 years they're planning to do 450,000 ounces. So that's starting to become a real mine now, right?
And that's for mining permitting. What about exploration? And in your case specifically, do you need any special permits from here on out to actually drill?
If you drill modestly up to 2,500 meters, to get that drill permit is very straightforward. Like it's weeks of preparation work, not months.
Does that include consulting the locals, or how does that look like?
The local engagement and communication doesn't stop. Like we're doing it today. We'll do it tomorrow. We'll do it the next day. Like
Hmm.
you don't come and go when you're working. We've got, people from the company that are, community engagement folks that are there all the time. The key, I think this, you can say this about operating anywhere is, you want to be consistent. You don't want to be there one day and not the next day and have them wondering whether you're coming or whether you're going. By being there consistently, communicating a consistent message, listening to them, working with them, like it's an everyday thing.
When do you want to go out there and drill? Do you have a definitive date, or is it season related?
Not really season related, but I mean, if I said this summer, as I said, we bought a drill. It's on it's on its way. I'm assuming it's going to take about a month once it gets there to kind of get it set up and organized and mobilized and whatnot. But I think we'd both be pretty disappointed if we weren't drilling in the summertime.
Where would you be assaying? Somewhere in Australia, I assume.
Cathy?
We use Intertech. They have a lab in Lae in Papua New Guinea.
Okay.
So I mean, they can do gold analyses. It depends. I mean, if we want a lot of multi-element, that would go to Perth, but we use Intertech.
What does that mean for turnaround times on assays?
Well, it'd be quite quick. I mean, actually, the Lae lab is quite quick. We could get within a month for gold.
Okay.
Or less.
Good.
We'll see though.
So essentially, assay results from Osena before the end of the summer. That's reasonable to expect.
Not unreasonable for drilling.
Okay. Well, how much money do you want to spend on Osena? Is that determined already?
Cathy?
Up
to $2 billion.
Yeah, the answer I hear is how long is a piece of string sometimes. I mean, but yeah, we're budgeting 2 million.
Yeah, well, it makes sense. I mean, if you come up with results that you really like and you want to follow up on something instead of putting more money into Anga and so on, but just kind of looking for roughly at a land here. Yeah, okay, that gives me a better idea of Osena. Let's talk about Anga maybe. What's Cathy? You said it's a little different than Osena. How is it different lithologically, structurally? What are the differences?
So at both projects, there's something, it's called the Kainantu transfer structure. So all across PNG, there are these interpreted deep-seated northeast trending structures called transfer structures, and where they intersect with northwest thrust faults, continent building faults is where you get a lot of these major deposits across the country, like Porgera, Frida River, K92. And so what we see at Anga is the intersection. It's within this zone of this intersecting northwest thrust and northeast transfer structure. And we directly see, we feel the chemical and structural footprint of extensions of potentially Arekompa or Maniapi, which are northeast trending faults at K92 on Anga. So go read in any of K92's disclosures, whether it's on their website or some historical reports, even from previous operators, what the chemical signature of those veins are. So they're gold, tellurium, bismuth, tungsten, tin rich, hosted in strongly philic altered diorites. So we have that at Anga. The sampling we had done to identify that was initially before we came along with some ridge and spur sampling. So you sample along the tops of the topographic highs. And so we had broadened that last July. And what we want to do now is go do some, say, tight space soil samplings, because that'll help us really localize the chemical signature. But what we've also done is taken mobile MT data, which was collected in 2022, which shows conductivity. And then we also have magnetic data, and we've done some 3D modeling of that data. So we can try and tie that chemical signatures that are like Arekampa and Maniape to structures in the subsurface. So a good set of targets there with a signature both structurally and chemically to known mineralization next door.
Mm-hmm. That is actually.
And then there's 2/3 of the project that hasn't even been sampled yet. So some stream sampling, I mean, we could identify more prospects easily.
It is the proximity to K92 with Anga that is particularly interesting to me because it really is very close and there are large similarities in the geology as you mentioned. But
we're actually closer to their plant than they are.
You're closer to their what?
We're closer to their plant, their processing plant, than they are.
Oh, interesting. Because it's 1.5 kilometers or something like that. Like it's
that's right.
Next door.
That's right. That's right. And they're 3. I mean, we're splitting hairs here a bit, but I don't know. It's kind of fun. They're 3 kilometers away. We're 1.5.
Well, is the expectation here, Cathy, that there's structural linkage between the packages, or do you think these are two separate systems?
No, they're structural linkages. So you can, it's all lines of evidence, I call it, and they lead to conclusion or interpretation. So looking at the geophysics, for example, looking at the terrain, so we can, it's very common, for example, that any of the valleys and ridges correlate with structures. So you can trace those out from the nearby property to our property, combine that with, geologic mapping, et cetera. So there's lots of lines of evidence that mineralization or vein type features that are present at K92, Arekampa, Maniape, I say both because they're parallel and trend in the same direction, are present on Anga.
So if there's an ore body there, it's just the same ore body. It's just property boundary that separates it.
Yeah.
Okay.
Same system.
Right. How deep do you think the boiling textures that you talk about here extend?
I can't really answer that question because we don't have any drilling yet.
Well, how deep do you, what's the thesis? How deep do you want to go?
Drilling, you mean?
Yeah.
I mean, initially we probably just do 300 to 400 meters. I mean, a good strategy, a good strategy could be drilling shallow, seeing what you get, and then if not economic mineralization in your first drill holes, you're at least vectoring to higher grade mineralization. I know that's been a good tactic at K92 and is generally a good practice in these kind of leach terrains. But yeah, I mean, initial targets 300 to 400 meters. I mean, this project's never been drilled, so we're not going to go in blasting with 1,000-meter holes.
Well, my cowboyism is getting disappointed here, but I understand that that's how you have to do it geologically. You cannot really be too much of a cowboy, but then again, I am more of a cowboy than a geologist myself. The thing is, yeah, go ahead.
Well, I was just going to say, I mean, I don't know if I'd do that anywhere. You want to see if your mineralization is near surface first. And we have nothing to suggest that it's not.
Don't you have something to suggest that it is close to surface? Because if I understand it correctly, you have gold, copper, moly textures at surface.
Well, yeah. But what's economic at surface? So yes, right. We have veins at surface with 4 grams per ton, clusters of carbonate base metal veins that are 25 meters long, for example. But yeah, drilling, we'd want to keep that shallow at first.
Right. Is the thesis that the gold, copper, moly textures that are exposed at surface, is the thesis that they correspond to a potassic core, or is there only going to be peripheral zoning here?
Well, so there's a couple different systems. So similar to Ontenu, we have these copper, moly, gold mapped diorite intrusives. We know those are there, and they could be the source of the metal we see across this area of Anga. But then we have vein signatures that are the gold, tin, tungsten. So multi-phase, all related, but different targets. So if we're targeting the veins, I'm not looking for moly signatures, for example.
Right.
If that makes sense.
Sure. How's the topography here relative to Osena?
Similar kind of rolling hills. So we are in the foothills of the higher, steeper range where the K92's veins are.
But it's not like this is up the mountain or anything like that.
No, I mean there's some topographic highs, but they're not as steep and large as to the southwest.
What I'm really getting at here is
But I mean the team can walk in and sample.
Okay. And what I'm really getting at here is thinking about, this is wet terrain, it's mountainous. Does it get muddy? Could that be a challenge from a drilling and exploration perspective in terms of casing stability, mud loss, and stuff like that?
Well, I mean, you obviously have to be careful about where you put your rig. So you're putting it close to topographic highs to avoid the sides where there's possible landslide risk. But I mean, this is where Dean comes in. He's experienced like the last 5 years working with K92 in this exact terrain, drilling and managing teams doing that. In terms of casing and recovering material, it's quite common you start with PQ and or HQ, so a larger diameter drilling and drilling your casing slow, so you make sure you recover everything you can.
Right. How much money are you spending at Anga then? Osena, you said about $2 million. What's the initial thought for Anga?
I mean, I have a million budgeted, but at the same time, I guess we're being flexible. So if something comes out really amazing at Ontenu and that's where the focus is, then yeah, we'll see where that takes us.
So that's two budgeted for Osena, one for Anga. You're going to need about $1 million. Let's call it $1.5 million. I'm assuming. Correct me if I'm wrong. For Guinea, that puts you at 4.5. You've got calling it 6 right now. Where does the rest go? Do you want to spend some money on Kili Teke as well?
It's nice not to run the bank account down to nothing, and then we're a junior exploration company. We'll need more capital, but we're not going to ask for more capital until we can show some drilling results. And as the guy on the phone asking for the money most of the time, you don't want to be in a position where you absolutely need to raise the money next week, or you're in trouble. So I'm quite happy to have $1 million plus buffer, in the capital budget. That gives us some flexibility on, when we, how we work and what we do next.
Well, I agree. But where does that leave you for Kili Teke? Do you want to spend money on it or not?
Yeah, so we do. We're doing sort of a landowner mapping exercise, landowner registration, just so we know exactly who actually does own the land, and historically that's been a bit of an issue here. So that process, if it's not started today, it's about to start imminently. And we'll go do some surface field work probably in a month or so. And again, it's nobody's been in working with the community for 8 years. So our view was go in kind of softly, gently, get to know each other again, and kind of that sort of process. So that will begin in the next several weeks.
It is different.
That's probably a couple 100,000.
Oh, okay. So nothing. Well, no major budget.
Yeah.
Some money, but nothing major. It is different topographically though. Kili Teke, if I understand correctly, I saw kind of pictures of it. It looks more remote than Osena and Anga. Is that true?
Yeah, and it's definitely more mountainous.
Well,
we flew over it. It's like I guess you could walk up it, but it would you'd have to have yeah. It's steep. It's steep. It's
so
steep.
knowing that, or why I'm bringing that up, is because of the grade of the resource that you have here. I mean, it's not high grade. Would it work with this topography, or does it need to grow a lot more? Because it's 1.8 million ounces. That's not nothing, but it's again not high grade. So what needs to happen here in order for this project to actually work?
Happy?
Um, so Kili Teke, it's exciting, not necessarily because of the resource it has, but what could be added to that resource around it. So this is kind of where chemistry is coming in, and I'm a little biased, but um, for example, there's an area called Bridge Gold Anomaly, and there were 9.3 grams per ton gold sampled in some soils. So when you look at the chemistry of that, it is identical to porphyra. So it's an arsenic tellurium gold signature. We have similar structural features there. And then adjacent to the resource was what Harmony called the Iru porphyry, which was quite a bit higher grade. I think, yeah, the trench returned almost 1% copper over 27 meters. So they had interpreted that to be a landslide block off of the resource, and chemistry has shown that's not the case. It's different. It's a different intrusion. So to me, I see a lot of opportunity to kind of add to the metal inventory here. There's also high grade skarns with I think up to 12% copper in historic drilling in these skarns, and they didn't add them to the resource just because they were geologically different. So to me, there's a lot of upside here in terms of what would make this project a go. Resource wise, we're undergoing evaluating that.
Are you going to be doing any met work this year?
No.
No, because I'm wondering because
I
you
mean,
mentioned
depends.
arsenic.
If we hit something interesting in drilling at Ontenu, not difficult to just go do some cyanide leach tests.
Because I'm thinking about you mentioned arsenic with the neighbors. It's an arsenic related system, I suppose. Could it be refractory? Could that become a challenge here?
I have no, I mean, exploration stage, I wouldn't have any indication that the gold would be refractory or not.
Okay. With the resource that you have right now, met is not an issue, is it?
No, Harmony did do some work. I think they had 90% copper recovery and 65% for gold.
Okay. Right.
That was really preliminary testing though.
Right. Yeah, that's right. But as you said, also the resource is not your focus here. When do you want to do that work? You said, Michael, you said they're potentially walking the ground right now. So any news coming out of there anytime soon?
It's month. I mean, it's months. I mean, we're hoping to actually start doing some geological work in 4 or so weeks. But before you can report back into that stuff, it's going to be it's a couple of months.
Right. Okay.
A couple of months.
May River, we didn't really talk a lot about it. It's also early stage. I think this is kind of the project that, as far as I understand it, the least about, if I get it correctly. What do you like about it, Cathy? Why do you have it in the books?
Well, what I mentioned earlier about complete systems, in terms of a complete porphyry system, I feel like we see that at May River, and there's two really awesome prospects there. One of them is VMS like high grade copper. It's called the UFO district. But there's 11% copper over 20 meters in some historic holes. There's in
At surface. At surface.
five VMS like targets there. And then this other prospect we call Skygate Trend is only 15 kilometers from Farida River. And it's similar to what we see in the Kainantu district. It's same host rock structural setting, chemical signature, like and Frida is a complete system. So they have their economic porphyries, they have economic high-grade gold veins, and we see something similar just 15 kilometers away.
And just for reference, Frida River has got a resource of 30 billion pounds of copper and 20 million ounces.
It's a kind of a geological marvel there. That's something that I've looked into a little bit myself as well. How much money do you want to spend on May River then in that case?
So I don't think we're going to. We've got some minimum. The exploration licenses have minimum requirements to keep the licenses in good standing, and our view is that's what we'll spend. So if we had to, prioritize where we're spending, this is going to get the least spending. So it'll be less than $100,000.
Right. Well, okay. So then, in terms of priority and spending, what I've written down is Osena, Anga, and then Kili Teke, and then May River. That's kind of how you see it. Okay.
So do we.
How's PNG from a safety perspective? Is it did you have to take any special? Did you have to do anything special, or you just land there, walk up or drive up to the projects, and nothing special?
There's some areas that we go in with security, but Cathy and I spent a week in Port Moresby and whatnot without security. And Jeff, was down there, and Andrew, we drove around in the company SUV. When you do go up into some areas of the Highlands, you do definitely want to take some security with you.
That's no, go ahead.
But I was just saying, no matter where you go in the world, you kind of need security. When we did Torex years ago, guys showed up with automatic weapons and said when we come within 100 meters, they're going to shoot us, and we believed them. And now they all work for Torex. So there's a process. There's a process, but you do definitely take some security with you in certain areas.
But when you say certain areas, what does that mean for your projects? And then again, specifically Osena and Anga, can you just do the work? Can geologists do the work, and drillers, can they actually drill without needing security?
So Anga, yes. Kili Teke, no. Osena, modest.
Okay.
Do you agree with that, Cathy?
Sure.
Yeah.
Oh. Yeah. Okay. What is what's the G&A that you're planning for 2025? I put it just tentatively at $1.5 million. Is that what you're thinking?
That's about right. Yeah, that's right.
Okay. So call it about $100,000 a month. What does that mean in terms of marketing? I see that you did the MIF. I saw you in Zurich. What are you planning for marketing this year?
Then after I saw you in Zurich, I went to Munich, Frankfurt, Hamburg, and London. So I'm going to spend the next week following up on all of those meetings. We do a bit of online marketing and stuff. We haven't done much historically until very recently because, as I said, we wanted to put everything in a way or present things in a way that was easy to understand the value that we saw. So we've now done that. So that's kind of my job. We'll spend a lot of effort and a bit of money marketing for sure.
What does that mean? A bit of money? I mean, last year you spent, and I'm looking at it,
probably spent $500,000. Let's spend $500,000 probably.
Okay, $500,000. So about twice as much as what you spent last year. That makes sense. Good. Well, I've gone through most of the questions that I had here. It'd be interesting to follow up in a couple of weeks when you kind of have that definitive plan for what you're going to be drilling at Osena. What keeps you up at night, though, Michael? Let's start with you. I mean, nothing's really ever perfect. If you had a magic wand, you could wave it at something and make it go away. What would you wave it at?
We trade 1 million shares a day. That's literally the only thing that bugs me. Everything else, I wish things went faster than they do, but that wish applies to every aspect of my life. The liquidity thing is the thing that is literally the only thing that I worry about. Everything else, Cathy and her team are executing beautifully on the ground. We got great local relationships. We got great government relationships. We got a plan. We got the money to do it. We got great shareholders. I mean, it's the full meal deal. And the thing that drives me crazy is liquidity.
Cathy, what about yourself from
So nothing
geolo?
operational, or geologically worries me a bit.
Well, and that's where I was going with this, Cathy. What about yourself from the geological perspective? What keeps you up at night?
I mean, from the geological perspective, nothing. I mean, we're doing all we can, I think, in an excellent manner with what we have and thinking outside the box in terms of looking at data, getting more data. I, the only thing I would change is, like Michael mentioned, is I wish things move faster. And not because I'm impatient, just because, yeah, I mean, things just take time and it's not always easy to demonstrate to people the successes you're making when things might move a little slower than they
We
want.
see a lot of exciting things in our future, and just
Yeah,
we wish um, we wish that was coming quicker.
Yeah.
That's
Well, hopefully this year is things are gonna be moving faster than last year. Again, you've got drilling planned and whatnot, so it seems like this is gonna be a busier year than last year for
absolutely.
sure.
Yeah.
So
100%.
yeah, I'm looking forward to catching up again. What am I here at the end? What am I forgetting to ask you? What did you come here hoping to talk about that I failed to bring up?
I think you've been pretty thorough. I can't think of
Yeah.
anything. I think you've been very thorough. Yeah, no, I think you've been thorough. And I mean, the only message I'd say is, we spent last year kind of, fixing problems in the rearview mirror. The rearview mirror is gone now, and it's, we're looking forward, and now we're doing the exciting, fun stuff.
All right. Well, let's pick it up in a couple of months. Let's wrap it up here. Thank you so much, Bo, for your time today.
Yeah, thank you.
And as always, thanks to everyone for watching Resource Talks. I have a couple of more things to say, though. The fact that this company was interviewed here today does not mean that they're necessarily a good or a bad company. I'm not here to endorse nor attack anyone. I am simply here to ask some questions. If you find that I have failed in asking a question that you would have liked to hear an answer to, which will happen as I'm not an experienced interviewer, please let me know and I will try to correct that mistake in a future interview. As mentioned at the beginning, please understand that mineral exploration and development is an extremely risky business. Losing money is the norm and should be the expectation. This is a very complex sector, and the performance of individual companies typically depends on many different moving particles, including company-specific factors like geology, financing ability, and many others, really, as well as particles that are outside of the company's control, like geopolitics, macroeconomics, commodity prices, and many more, most of which are nearly impossible to fully understand. Moreover, these companies that typically get interviewed on Resource Talks are in the pre-revenue stage, which means they rely on the public markets for the financing of their operations, which could result in shareholder dilution. Furthermore, as a general rule of thumb, you'll be better off understanding that all company communications online, albeit this interview or their website and their presentation and their social media accounts, or even the social media accounts which you thought were your friends and then told you about a stock, everything really that these companies do is intended as marketing. And although I do not make buy or sell recommendations because there is a clear conflict of interest given the nature of my business, many out there do. And you should be aware of that inherent bias and you should be careful out there. That bias is not always going to be clearly disclosed with everyone out there. So it is safer for you anytime you're watching any type of company specific content to approach it with a dose of skepticism and assume that the party telling you about it is biased in at least some shape or form, because there will always be a bias. Again, albeit clear or not. So always ask yourself what the incentive of your counterparty is and never rely on them regardless of their incentives, but instead double check if what they're saying is true, again, by using setterplus.ca. The fact that I have no idea what I'm doing should already be clear to you at this point. I am not saying this to make jokes or laugh with myself. I just simply do not have a long enough track record of consistent investment profits. So I should, under no circumstances, be considered an authority on anything. Again, although this may sound amusing to you, believe me, it is not amusing, and it is not intended as a joke. I'm simply pointing out a fact and warning you not to rely on anything I do or say. Unfortunately, at least to my understanding, nobody out there has any special abilities. The CEOs do not possess any superior knowledge, and they cannot know about what will go up, what will go down, or what will go in circles. Some people even believe that to be rule number one on Wall Street. Nobody really knows. None of us know whether any of the company's activities will result in a success, again, given that we're talking about high-risk activities where most of the times it ends in failure. Also, unfortunately, try as I may, I won't always catch all red flags or all challenges with the companies. So even if I did ask a few tough questions in here, don't rely on this being all of the tough questions. Again, these are complicated startups with many moving parts, and I am conflicted given the nature of this business. Therefore, I cannot guarantee the quality of anything presented in this video, and you cannot hold me responsible for any losses or damages stemming from the way you decide to use this interview. Viewers, listeners, and readers acknowledge and agree that the information presented herein did not constitute a solicitation or an offer to buy or sell any security or investment or to participate in any trading strategy. Resource Talks and all parties involved in the management of the business strictly disclaim any and all liability for losses and or damages, whether direct, indirect, special, or consequential, or other consequences, however so caused, arising out of any use or reproduction of the content published by Resource Talks or any decision made or action taken in reliance upon it. By consuming this content, all consumers vow to release Resource Talks and all parties involved in the management of the business from all claims, proceedings, or consequences. This is all to say, I know it's a lot of lawyer talk, but this is all to say that you shouldn't blindly trust me or anybody on the internet, and you should do your own research. Once again, social media is meant for entertainment. It is setterplus.ca where you do your research. That's where you'll find the company's official filings, and I encourage you to read and analyze the Management Information Circular, the financial statements, the Management Discussion and Analysis, and whenever available, the NI 43-101 technical documents. If you don't understand everything in those documents, the chances of you losing money are even higher than they normally are in this space. And as mentioned earlier, the chances of even the best analysts in this sector losing money are extremely high, since this is venture capital and it is not for everybody. I'll leave you with one of Charlie Munger's quotes, which I wish I had listened to more often earlier on, which says, quote, "If you don't understand it, don't do it."